What's up, and welcome back to another episode. Today I'll be talking about micro E-mini NASDAQ 100 index futures, and this will be a top-down approach to pertinent levels that I see could be possibly reached for in the weeks to come. We are in a consolidation, so uh, be aware of tight ranges. Be aware of a lot of returning back into ranges, choppiness, and stop runs. I would like to preface this by saying this is not financial advice. This is not anything to do with buying or selling. This is me giving you my perspective on where we are in the charts. If you would like to purchase any, please refer to a licensed investor for legal advice and futures advice. So here we are. We have the weekly chart. So what I did was I encapsulated this suspension block here that you see us trade down into a couple of times that we reference. I have this candle's wick. So the range that I'm looking for in the weekly chart, or the range that we are currently trading in the weekly chart, is essentially this low to this high. All right. So all I did was just kind of just mark out what was going on within that range there. Took this wick here, right, draw it out in time, and this kind of just where we were if we were to continue lower. The lower extreme of that current range would be this levels or these levels here, and then the current upside extreme levels would be this level here, and that's the weekly chart. Dropping down to the daily chart, to the left side, I don't have it fully drawn out because I don't want to get too pushy in where I want to see price going. I kind of just have it here just to let me know if we do begin to want to trade lower and take out these equal lows here. You got this wick, this volume imbalance, and then this candles right here level here. And I don't know why the 0 is down there. Let's see if that's from the weekly chart. Nope. All right, so I just have to recalibrate that, but those would be those downside levels here. The most important levels that we have are, again, so this SIBI here, see us trade up into that here and run lower back down into this candle's wick. All right, so if you was in my Discord, once the price was trading lower, you knew that we had eyes here. Cool. Let's draw that out in time. There. All right, and then the low, since we're here, might as well do it right. The open on this candle is 38.75. The open of this candle is 338. Okay. And then the low of this candle comes in at 150 even. So we're good on that. Visibility across the board, we're good on that. Okay, cool. But okay, so we have this suspension block here, and how this is defined is this lower right corner where it says set. If you click that, you see how we have two sets of different price actions. All right, so that right there is the volume imbalance, and to get to that, you just press the settlement button to the right, and you want to encapsulate these right here. The next thing that I would encapsulate is the buy side liquidity pool above this candle's high. So February 11th, 2026, that high is a buy side liquidity pool. I don't have it transposed on the daily chart, but I do have it on the hourly chart. All right, but this is very important too because you can see price want to use these levels for support or and resistance to send price lower or higher for the current week. You can also see these, if you draw them out in time, you can also see these levels be referenced to as intraday targets and turning points. So it's very important to have those on a chart, not your executable chart, but just a chart that just has some of the most important levels that you would need to operate whenever you get down to these lower time frames. Okay, so here we have the hourly chart. So the first thing I would do is line this up a little bit better. and then I would send it to the back because it doesn't seem like it's sent to the back. Okay, cool. So like I said, we have this buy side liquidity pool in a daily chart that I didn't have on the daily chart, but I said it would be transposed down to the hourly chart. That's this high here. You have this fair value gap. So this down close candle coming in on February 3rd at 9 a.m. Let's make it a little bolder for you. That right there, that's a fair value gap. So that would be an upside target if price was to continue higher. Trade through the equal highs here and want to reprice higher, then this would be a level that we would see price possibly want to trade back into that. The next level of upside will be here. Say if we were to trade through this and we don't break lower, so say we get up in here and we do something like this. All right, boom. So we get up into this level, we'll monitor how we trade at this level. If we continue higher, then the next upside objective will be here. And then these equal highs that I won't have marked out on my chart, but they are there. This would be a buy side liquidity pool. All right, cool. So we have upside objectives on the hourly chart. If we were to trade higher, there would be some upside objectives. And then for downside, if we were to trade lower, the immediate, my eye immediately would go to this candle's low here. Realistically, if you wanted to, you can fib it to be able to play with that range there. And then that candle's low there. All right, so if we were to get up into this gap again, get up into the suspension block. All right. And then we were to turn and go lower. All right, these will be some downside objectives or levels that I will watch for to see how do we trade once we get to those levels. Do we trade straight through them aggressively, or do we get to them and then we bounce and then trade higher, or start to come off of those levels and do something like this? All right. So it's all a walk. It's all a up here. It's all a review of price action on a day-to-day basis. But having some of these levels transposed onto your chart, or having all of these levels transposed onto your chart, is the basis of directional bias at a certain time in the market. How are we trading at a certain time in the market? Where do we just trade from? Where do we just come from? And where are we trading to? What time is it? What is the characteristics of that time? And then how to possibly read an entry to enter into that price run, targeting the levels that you have from your higher time frame on a lower time frame interval. Thank you for watching. I hope this was helpful. If it was, like, subscribe, comment. Talk soon.